Hello, everyone, and welcome to the IHI Call Days, Call 5, preparing the financial part of the proposal. My name is Sara, and I will be moderating the webinar today. Before we start, let me remind you a couple of things. We are recording this session, and it will be published on the IHI website and on the B2Match platform. We will also publish the presentation slides, so check after the webinar if you needed to check the content of this webinar. And if you want to ask a question during the session, please click on the Join the Discussion button on the bottom right corner of your screen, and they will be answered at the end of this presentation. Today, I'm accompanied by my colleague Gael Lankmans, Financial Officer at IHI, who will guide you through the presentation. Gael, the floor is yours.
Thank you, Sarah, and good afternoon, everyone. So I will go back to the content of this webinar. So today I'll go through the different budget items that are composing the budget. I'll explain you also the different types of contribution that can be brought by private members and contributing partners, and namely ICOP financial contributions and IKAA. I'll explain also the different key thresholds for your budget. I'll present the annex on budget as well, which is now compulsory, so to be submitted with your proposal. I'll give you also a practical example on how you can build your proposal budget, and also with the different steps you need to follow in order to build your budget concretely. And then, as Sarah said, we will answer the questions you've put in the chat at the end of this presentation. So let's start. So your total eligible costs, they can be incurred by different types of entities. One type of entity are the ones that are requesting funding only. So we expect, for instance, SMEs, non-profit organizations, patient organizations, academics, and so on, to request only the full reimbursement of their costs, basically. And so in that case, the cost would be covered by public funds, mainly, meaning the cash we receive from the European Commission. Then your costs would be also incurred by entities that are not requesting funding, but who are contributing in kind and or cash to the projects. And so those entities are private members or contributing partners. And so in that case, the cost would not be reimbursed and would be covered by private funds, since they will be incurred by those private members and contributing partners. Here underneath of the table, you see the logos of the different associations that are our private members, but I will come to this a bit later on. And then there is also a third type of entity that may incur costs of your project. Those are the hybrid participants, we call them, because they can both contribute in kind and or cash to the project, and also request funding. And so those entities are also private members or contributing partners, and of course it's optional. So you can see that your project's total eligible cost, they can be covered by both public funds and private funds. So there is this co-funding principle, and so that's really the specificity of a PPP, a public-private partnership like IHI. And on the side as well, you have the in-kind contribution to additional activities, so what we call IKAA. And so those contributions are not project eligible costs. That's why they've put a bit aside, and they can be contributed by private members only. An important element is the fact that those entities that are private members and contributing partners, so who are bringing ICOP financial contribution and IKA to your project, they have to bring as a minimum 45% of your project's eligible cost and IKA. That's an eligibility criteria, so it's really key. So, but who are those private members? So they are the 4 industry trade associations, as you can see here. So there is FPIA, also including Vaccines Europe, MedTech Europe, Europa Bio, and COSIR. And when we refer to private members, we also refer to the constituent entities of those private members, meaning the members of those associations, and also to the affiliated entity of those entities, meaning the entity that have a financial or a legal link with those associations or with those members of those associations. The contributing partners, who they are, so it can be any legal entity interested in supporting the GU objectives in the specific area of research, but without becoming a full member. So they can apply by submitting a letter to the governing board before the call deadline. And in their letter, they should specify the scope of their commitment to the proposal and to the GU objectives. And also the contribution, so in terms of ICOP and or financial contribution, they must fulfill the eligibility criteria that are specified in the Article 6 of the Model Grant Agreement in order to be eligible. Also the contributing partners, based on the letter of application, they need to be approved by the IHI governing board. And you see here some examples of contributing partners that we've had already in call 1 of IHI. So we have AB Science, Icometrics, Combinostics, just to give you some examples. And if you want more information on contributing partners and on how to become contributing partners, you can visit our website. You have the direct link here on the page. So those private members and contributing partners, basically they can bring different types of contributions. The private members, they can bring ICOP, financial contribution, and IKAA, the three, while contributing partners, they can only bring ICOP and financial contribution. And so they cannot bring IKAA. That's an important. And also, any entity that is not a private member or not a contributing partner cannot contribute IKAA, ICOP, and financial contribution. But before explaining those different types of contribution, I wanted to give you first an overview of the whole budget with all the budget items. So they're all listed here, and you can actually divide the whole table into 3 parts. So in blue, you have the different types of eligible costs, like personnel, subcontracting, and so on. This is applicable basically to all applicants. So also the one bringing ICOP, for instance, needs to fill in these columns in blue. The second part relates to the EU requested contribution and the other sources of financing of your costs. And in purple, you have the IHI specific budget items that I was referring to. So ICOP, non-EU ICOP, financial contribution paid, and IKAA. And so those specific budget specific budget items are only for private members and contributing partners. And IKAA is only for private members. So the 2 first parts of the budget table will be reflected in the budget table in your part A of your proposal, because they will be included automatically in part A based on what you will have encoded in the IT tool of the Commission. While the last part of this budget table will not be reflected in the part A of your proposal, because it's actually not captured in the EC IT tool. And so it will only be captured in the annex on budget. So there are actually, that's why we have 2 compulsory steps for your proposal budget. You not only need to insert your budget in the EC IT tool, but you also need to fill in the IHI annex on budget. I'll come to this later on. So first, let's start with these IHI specificities. ICOP, which stands for in-kind contribution to operational activities. What is it? So it actually consists of eligible costs that are incurred in implementing the project tasks. So it can be personnel cost, subcontracting cost, and so on. And as I said, it's only for private members and contributing partners. And the companies that are providing ICOP, they are actually subject to the exactly same rights and obligation as any other beneficiary who are signing the grant agreement. So they have the same, they must respect the same cost eligibility criteria. They have to follow the same cost calculation methodology. They have the same rules for reporting and so on. So the ICOP, the formula is actually that it is the total eligible cost minus the requested EU funding, and if any, so in case a private member, for instance, is a hybrid participant, they are requesting funding. In that case, the ICOP will be equal to the total eligible cost minus the funding they are requesting. Of course, in case the private member is only contributing ICOP, then ICOP will be equal to the total eligible cost. But don't worry, the annex on budget will actually calculate this ICOP for you based on what you have entered in the annex as eligible cost and as requested funding. So also in the category ICOP, it includes both EU ICOP and non-EU ICOP. I will explain you what it is in a second. But just for you to know that when you mention the non-EU ICOP, it should be already included in the amount of ICOP. In this example, for instance, you have the 2 million. The 2 million are included in the 10 million. The total ICOP include both EU and non-EU ICOP. And what is it, non-EU ICOP? So that's actually the ICOP, so the eligible cost incurred in implementing the project tasks, either by a private member or a contributing partner, but outside the EU or outside one of the associated countries of Horizon Europe. So when we refer to the associated countries to Horizon Europe, we refer to these 16 associated countries that are listed here. And there are also 2 countries for which there is an ongoing agreement. There is no agreement yet. That's for Morocco and for UK. And so this means that in case you have ICOP incurred in Switzerland or in the US or in the UK, this ICOP will be considered as non-EU ICOP. And if by the time your proposal is selected and you reach the stage of the grant agreement preparation, if by that time there is an agreement reached with the UK, then the ICOP will become EU ICOP, will not be considered as non-EU ICOP anymore. So what's the criteria to identify if it's EU or non-EU ICOP? It's actually where the activity is carried out. So it does not take into account where the company is established. So as an example, if a company is based in the US, but the activities are carried out in Germany, then the cost of these activities will be considered as EU ICOP. And on the other way around, if the company is based in Germany, but the activities are carried out in the US, then it will be considered as non-EU ICOP. So there are also some limitations of this non-EU ICOP. At program level, the non-EU ICOP should not exceed 20% of the total ICOP brought by private members and contributing partners. So that's the limit if we take all projects of IHI together. And at project level, so for your proposal, the limit for call 5 is set at 30% of non-EU. So this threshold of non-EU will be actually calculated automatically by the annex on budget, and you will get a message in the annex directly in case you have more than 30% of non-EU. The message will be that in case your proposal is selected, at grant preparation stage, you will need to reduce the non-EU ICOP to maximum 30%, but also maintaining, of course, the 45% contribution. So that was it for ICOP. Now I go through the next point, which is on financial contribution paid, which is another type of contribution that can be brought by private members and contributing partners. So what is it? It's basically cash that is paid to another participant in order to support its project eligible cost or just part of it. It can count for the 45% threshold if the recipient of that financial contribution is eligible for receiving funding. That's an important condition. And in your proposal in Part B, there is a specific table in which you need to explain the financial contributions that you have in your proposal. So basically, you need to specify who are the private members and the contributing partners that are paying the financial contribution, what is the amount, which beneficiary is actually receiving it, and for doing what tasks, basically. You may have a special case of financial contribution as well. That special case is when you have a private member or a contributing partner that is paying a financial contribution to another private member or contributing partner. It can count also for the 45%, but only if this private member or contributing partner that is receiving the financial contribution is eligible for receiving funding. And in that case also, the ICOP of the recipient of the financial contribution will need to be decreased by the amount of the financial contribution received. This is to avoid double counting. But don't worry, the annex on budget will calculate this also automatically, because actually ICOP will be the result of your eligible cost minus your requested EU funding minus the financial contribution received. Now IKAA, which stands for in-kind contribution to additional activities. So what is an additional activity? To have an activity to be considered as an additional activity, you need to fulfill different conditions. The first one, which is maybe one of the most important, is regarding the scope of the activity. So it must actually contribute towards the achievement of the objectives of the project, or towards the dissemination, the sustainability, or the exploitation of the project results. Also, it should not be funded by IHI or any other union funding program. It should be carried out in the union or in one of the associated countries. It should be described in the annex on budget, so to be annexed to your proposal. And it should not be project tasks, and therefore not ICOP, as per the description of the action. So those are the different conditions that must be fulfilled to consider to be considered in order to identify if an activity can be an additional activity. So it's also only for private members, so contributing partners or any other type of entity cannot bring IKAA. And there is also a limitation at program level for IKAA, which is 40% of the total in-kind brought by private members. At project level, so for your proposal, there is no limit, but the tool, the annex on budget will show a message automatically in case you exceed the 40%, mentioning basically that the concerned private members should inform their relevant association offices in case it exceeds the 40%. Why? Because those associations need to be able to monitor, that they need to know this information in order to monitor properly the IKA threshold at program level. So what are the differences between IKA in your project and ICOP? So ICOP are the eligible costs in implementing the project task, the project activities, as it is described in your description of the action, while IKAA are costs for additional activity that are not project tasks and therefore not ICOP. And it's really up to the consortium to identify whether an activity is ICOP or IKAA for the respective project. Another difference, ICOP are eligible costs, so they can be reimbursed by IHI in case, of course, the entity is eligible for receiving funding, while IKA are non-eligible costs, and so therefore they cannot be reimbursed by IHI. Also, ICOP is subject to the Horizon Europe rules, so the same rules as for any beneficiary signing the grant agreement, while IKAA can be valued following the usual cost accounting practices of the company. They have also a different deadline for the reporting, different reporting tools, so there are quite a lot of differences. And another one is regarding the time frame. So ICOP must be for the cost of the project activities. They must incur during the project implementation in order to be eligible to be considered ICOP, while IKAA, the costs can already be incurred before the project starts. So from the moment of the submission of the full proposal, and they can be incurred up to 2 years after the project end date. That's also a major difference. So to give you some examples of what could potentially be IKAA, imagine your project objective is to integrate diagnostic and predictive approaches to support multimodality cancer care. You could have here we have written 3 different examples of IKAA, of additional activities. One could be before project start, and it could be to develop an image-guided radiation therapy device. The device would be used for the consortium activity, and as a result would contribute to achieving the project objectives. Another example, but this time during the project implementation, an additional activity could be to generate data from clinical trials using cancer treatment modalities, but other than those of the project, and which would be used as an independent data set. And these data would further contribute to verifying the usability of the integrated approach developed by the project and would help its fine-tuning, but the project activity would not depend on this specific data set. And a third example would be after project end. An additional activity could be to develop a decision-making software tool that would enable easier communication in the cancer care continuum and between stakeholders. And this tool would contribute to the development and the exploitation of the project result. So those are some examples to give you an idea. What is important is to always well check the different conditions that I was referring to on slide 17. And you need to make sure that all those conditions are fulfilled. And then normally there should be no issue. It could be considered as additional activity. So what cannot be considered as additional activity? A few examples, for instance, the preparation activities for the consortium agreement. That is not considered as an additional activity since it is a mandatory prerequisite for all projects. Also, activities that are essential for reaching the project objectives. So those activities should be considered ICOP. And also activities carried out outside the EU or outside one of the associated countries, since IKA must be incurred in Europe or in one of those associated countries. So just few examples. And here I've listed also some examples from IKA we got in Call 1 projects. So for instance, after project N, one organization suggested to organize a meeting to disseminate the project results or to develop training program for a good use of tools developed by the project and so on. So here is the annex on IKAA. This is more or less how it looks like, and you can see that some of the information that is requested in this annex in yellow are confidential. Confidential means that it will be only shared with the consortium, with IHI staff and with the IHI governing board, while the information in purple will be public, meaning published on IHI website, and therefore it's really important that all the information is provided, so especially those public information, so we should not have empty cells in the blue or purple cells. Also, it's very important that the information provided is understandable by any reader. Not all readers are scientific experts, so please try to avoid, for instance, acronyms and try to provide clear explanations and concise explanations as well. Another point, I forgot to put it on the slide, but it's important to try to harmonize the different additional activities. So try not to have a very long description for one activity and then one very, very short. So try just to be consistent and clear. Here it's a comparison table between ICOP and IKAA. I will not go through those details today, but it's just for your information. I think it can be a good reading for after this presentation. It also gives some elements on how it should be reported, what are the deadlines, what are the audit certificates required, and also what are the differences with IMI 2 for the ones who are involved in this program as well. And now that you know what is ICOP, IKAA, and the financial contribution, I can explain you what is this key threshold that we are always talking about, this 45% contribution. So in our regulation, it is mentioned that the private members, the constituent entity, and the affiliated entity, as well as the contributing partners, they must contribute at least 45% of the action's eligible cost and the action of the additional activities. So if you translate this into a formula, it gives what you can see here: ICOP plus FC plus IKAA should be higher or equal to 45% of the action's eligible cost plus IKAA. That's the key formula, but okay, it's a bit complex, and the good news is that the annex on budget checks it automatically for you. Of course, you need first to insert all the data, all the figures, but then automatically you will see if your proposal is eligible or not. It's really key because if this threshold is not reached collectively, then your proposal will not be evaluated. And since it's really key and important, the coordinators of the proposal, the coordinator of the proposal should submit actually a declaration, which is an annex to the proposal, to confirm that the required 45% contribution will be provided. So it should be, this declaration should be signed and submitted together with your proposal. That 45% contribution can be reached with actually only one or two types of these contributions. So for instance, you can reach it with only ICOP, and of course, only the private members and contributing partners can contribute to the 45%. Another point here is important to know that the 45% should actually be maintained during the whole project implementation. So as a prudent approach, IHI would recommend to try to aim for more 50% than 45% actually for your proposal, just in case you have one member dropping from the consortium during the project implementation, or in case there is an activity that cannot be carried out in the end, and which would create a huge decrease of your ICOP, for instance, then at least you would not have issue monitoring, finding a solution in order to maintain this threshold. So that's the prudent approach IHI would recommend, to try to aim for 50%. Now I'll explain the different cost categories that are the eligible costs. So you have in blue all those categories: the personnel, subcontracting, and so on. We'll go through them one by one. And what is key is that all those costs, they must fulfill the cost eligibility criteria. So you have the link to the Article 6 of the Model Grant Agreement here. Make sure you read them and you understand them, because it's really key. If your costs are not eligible, they cannot be reimbursed, and they can also not be considered as ICOP. So what are there? What is mentioned in that Article 6, among other, is that your cost should be actual, they should be real, so not estimated. They should be recorded in your accounts, they should be foreseen in the budget, they should be necessary for the action, documented because they will be auditable at some point, so they should be identifiable, verifiable, and so you can see all those criteria in the Article 6 of the Model Grant Agreement. So let's start with the personal cost. So in this category, you may have cost for your employees. You could have also cost for a person that have a direct contract with you, but not an employment contract. For instance, if you have in-house consultants. You could also have in this category the cost for seconded personnel. So that's when you have a person that is employed and paid by a third party, so external to the consortium, but who is put at the disposal of the beneficiary against some payment or for free. That's the case, for instance, of a professor of a university. That professor is paid by the university, employed by the university, but it can be that that professor is also put at the disposal of your organization as a researcher. And then in this personal cost category, you can also have cost for SME owners or natural persons that are not paying themselves a salary. That's a specific unit cost. So if I take the most common case, the case of the cost of your employee, you will have two options. The first one would be to use actual costs as per the Horizon Europe calculation method. So to calculate the personal cost for one person, you need to multiply the daily rate for the person with the days that have been worked on the action, with a maximum of 215 days per year for a full-time equivalent. And the daily rate for that person, you would get it by dividing the actual annual personal cost for the person by 215 days, again, full-time equivalent. And in that, in the annual personal costs, you can actually include any component that are legally obligatory by national law or by the employment contract. So it can include the taxes, the social security contributions, even the Christmas pay, and so on. While under Horizon Europe, it's also possible to deduct the the working days that have been spent on parental leave from the fixed days of 250 days. And another option for the cost of your employees is to use average personal cost, so which is a unit cost, in case it is in line with your usual cost accounting practices. That's also another option. But I invite you to have a look at the annotated model grant agreement. You have the link here, because there you have many examples of the different calculation methods for the different types of personnel costs. Subcontracting cost now, so that's when you have a beneficiary that contracts a third party, so external to the consortium, in order to work on some project tasks. In this case, there is a contractual link between the subcontractor and the beneficiary, and it is based on business conditions because it includes a profit margin for the subcontractor. The selection of the subcontractor is important. It is important that the beneficiary follow its usual internal practice for that selection and ensure best value for money, or lowest price if it's appropriate, as well as transparency and that there is no conflict of interest. And one last point on subcontracting cost, it's not allowed to have subcontracting costs between beneficiaries. Another cost category are the purchase costs. So in that category, you can have the travel cost, the cost for the accommodation, cost for your equipment. In most of the cases, you will need to only charge the depreciation cost, also following your usual practice in terms of depreciation. And you can also, most of the time, only charge to the project the part of the equipment that has been used for the project. You can also have in this category other cost for other goods, works, or services in case it is necessary to implement the project. Normally, it will be quite limited in scope, so it will not concern project tasks. But in case it is to implement project tasks, it will be more considered as subcontracting cost. Internally invoiced goods and services. This is when goods or services are itself produced or provided by the beneficiary itself to be directly used for the action. For instance, self-produced consumables or specific devices or facilities. This should be calculated as unit cost following the usual cost accounting practices of the beneficiary, and it should also fulfill the general eligibility conditions. The indirect cost, it's calculated automatically as flat rates, as 25% of the direct costs, excluding subcontracting costs and excluding internally invoiced goods and services. So as I said, it's calculated automatically and it's for all beneficiaries, so also for the companies that are providing ICOP, which is different than under IMI 2 for the one who are participating in IMI 2 project. It's important that no indirect costs are included in the other cost categories to avoid double counting, because since it is calculated automatically, you need to ensure that it is not included in the other cost categories. For instance, you may have a company that uses average personnel costs, and their usual practice is to include indirect costs in their FTE rate. but well, in that case, the rate should be recalculated in order to exclude the indirect cost. And now I'm going to the last part of the budget table, which relates to the EU contribution and other sources of financing. This is basically to reply to the question, how are the costs covered? So your costs, they can be reimbursed by IHI with the EU requested contribution. They can be also just covered with your own resources, or they can also be covered with by a financial contribution that you have received, other than the one you have already received from IHI. So for instance, a financial contribution that you would receive from a private member or from contributing partner. And so you can have several scenarios. It can be just one source of financing, it can be a combination or none. So regarding the first category, so the EU contribution, the funding rate is always set to 100%. It's automatic. The maximum EU contribution is also automatic. It's the funding rate multiplied by the total eligible cost. And so based on the maximum EU contribution, you may request EU contribution, of course, if you are eligible. And so here, the requested EU contribution is a field that you need to fill in manually. And it's basically the amount of EU funding that you are requesting to reimburse your cost or part of those. So the 100% funding rate, it actually gives the wrong impression that all participants will get all their costs reimbursed. But of course, it's not the case because you have private members and contributing partners who should bring at least 45% as contribution to the project. And also because you may have participants that are not eligible for receiving funding, like you may have in your project entities in the US or in Switzerland, for instance. So no, not all participants get all their costs reimbursed, that's clear. So here you have a simplified budget example for a single stage call. You may have, so you will definitely have public partners like SME, for instance. We expect those type of participants to request the full reimbursement of their costs. So out of the 15 million of their cost, they would get 15 million of costs reimbursed. The second category would be private member and the contributing partner, if any, who would not request any funding, but the totality of the cost would be considered as ICOP. And the last category, which is optional, of course, you may not have hybrid participant, but you may have, you also may have. So those hybrid participants, out of the 10 million that they have as cost, 5 could be reimbursed and 5 could be considered as ICOP. And so you see that in the end, out of the 40 million total eligible cost plus IKAA, 50 are coming from the industry side. So we reached the 50% eligibility threshold, which is good. So in your proposal, as I said, you may have participants that are eligible for funding, of course. So from those public partners, like the SMEs or the academics, for instance, we expect them to request the full reimbursement of their costs. You may have hybrid participants as well. Those ones, they can request some funding, but they need to keep in mind that they also need to contribute to the 45% contribution. And they also should keep in mind that the fact that they request some funding, of course, it will decrease the funding left available for the other participants. And in case you have participants that are not eligible for funding, for instance, because they are outside the EU, well, those one you need to ensure that, of course, they don't request any EU contribution. So who gets what part of funding? That's really something that needs to be discussed and agreed internally among the different applicants. One parenthesis about UK participants. So at proposal stage, those entities, they are considered as eligible to request funding because UK is considered as a Horizon Europe associated country, even though the agreement is still ongoing. But so they can fill in their budget as being, as flagging themselves, specifying themselves as beneficiary. And then if the proposal is successful, so during the grant preparation phase, the requested funding could be either covered by IHI in case the UK does indeed become an associated country, or those requested funding could also be covered by the UK government in case the UK does not become an associated country. For the Swiss participant or US participants, so those participants, they can participate to your project, but they are not eligible to receiving funding unless, of course, they are considered as essential for the project by the external evaluators. So your cost, the cost of the beneficiaries, they can also be covered by financial contribution. So that's basically the amount that is expected to be received for the project, but other than the EU contribution, so other than from IHI. It includes then the financial contribution that could be received from private members or from contributing partners, but also from other sources like regional funds, for instance. The beneficiaries also that are receiving a financial contribution, they should ensure that they do not request any EU funding for the costs that are already covered by a financial contribution. So that's important to avoid any double funding. And then the cost covered with own resources, that's basically the amount expected of own resources that the participant plans to use for the implementation of the project. It's basically when the costs are not entirely covered by the EU contribution and by the financial contribution, or by both. And for the private members and the contributing partners, it's always a zero, that column, because their own resources are actually their ICOP. So here, a simple example of the different sources of financing. Out of the 20 million of total eligible costs, for instance, for some public partners, 15 million would be covered by IHI, so with EU requested contribution. 4 million would be covered by a financial contribution received, and then there would be just 1 million covered with own resources. What is important is that all the costs are covered in a way by one source of financing or another, but also that there is no profit. So you need to check that the total eligible costs actually equal the requested EU contribution plus the financial contribution plus the own resources. So all the parts in green on this slide. Well, actually, the annex will do this calculation for you because it will be automatic, so don't worry. So talking about this annex on budget, I will show it to you. First of all, why we have this annex on budget? First of all, it's because the budget table in the EC tool is standard for all EU grants. So the EC wanted to harmonize the budget table for all EU grants, and therefore it does not capture the IHI specific budget items like ICOP, FC paid, IKAA. It is missing, which is a problem for us, of course, because then simply your budget in your proposal in part A would be incomplete, and also it would be a bit tricky to calculate the 45% threshold. So we had to find a solution, and so we developed this annex on budget in order to reflect those specific budget items that are ICOP, non-EU ICOP, FC paid, and IKAA. So this annex is mandatory, so it must be submitted as part of your proposal. And you will see that it's actually quite useful in the end, because it will calculate automatically the thresholds that are relevant for your budget. It will also does not allow some values to be entered in some cells when it is not applicable. Some figures will become red when something is wrong. You will get some warning messages to avoid wrong data are entered, and so on. So it ensures a bit to have a quality check, so to say. And therefore, there are two compulsory steps for your proposal budget. First, you need to fill in the annex on budget, and when all looks good, then you can insert your budget in the ECIT tool. But of course, you need to ensure that the values are consistent between the annex and the figures inserted in the ECIT tool, because some of the information will be in both places. And in case you have discrepancies between values, the one encoded in the IT tool of the Commission will actually prevail. But please try to just make sure there are no inconsistencies. So regarding the annex on budget, it's actually an Excel document with 4 tabs. One tab is called Simplified Budget. It looks like this. It actually contains only 3 rows, 1 row per type of participant. So you have 1 row for the beneficiary that are requesting funding only. So they are not providing ICOP, financial contribution, IKA. They are not allowed to. They are only requesting funding. Another row is for the private members, whether they are requesting funding or not, so whether they are hybrid participant or not. And the third row is for the contributing partners. Same thing, whether they are requesting funding or not, or whether they are hybrid participant or not, they need to fill in their budget in that row. This tab is not mandatory, it's really just optional. It is also a way for you to test the different budget scenarios, because there are not many cells to fill in. And it's also convenient maybe to, get a quick ID if your proposal is eligible or not, if it reaches the 45% or not. Because actually on the same page, you see directly under the table the results of what you have inserted in your budget. So let's have a look closer to the results, what type of information it gives you. The most important element is it's regarding the 45% eligibility criteria, of course. So in case you do not reach the 45%, it will become red. In case you do reach the 45%, but you are still under the 50, which is the recommended approach by IHI, it will become orange, which is fine. And if you go even beyond the 50%, then it will become green. And the other checks are not blocking, even though they may become red in some cases. But even if you have some red, you still can proceed with your proposal and it will not be a blocking issue. But so the other types of results you can also check is regarding the non-EU threshold, it's regarding the IKA threshold, and it's also regarding the balance between the financial contribution paid and the financial contribution received. Another tab is for the detailed budget. So that tab is compulsory. That's the one who will contain all the budget figures. So you will have 1 row for each type of participant, and you will. The idea is really to insert all the budget there, and then to check if it's if the results are fine. The result I was just mentioning the slide before. It's important to start always with by selecting the type of participant, because based on the type of participant, some cells become not applicable, some others not. So if you can see, for instance, that here in blue, only the cells in blue are editable, while the one in gray are not applicable. So depending on if you select private member, for instance, or contributing partner, some cells will become blue and others will become gray. So first step is to select the type of participant, and the second step is to encode the total eligible cost. And then after that, you can continue encoding the other values. So it's basically, you need to start from the left and then go to the right. And then once it's done, you can check the results again. So those are exactly the same as I was showing before. So it is exactly the same results than for the simplified budget tab. Then you correct, of course, if it's necessary, and you continue until you have you have reached the 45% as a minimum. So now I will give you an example, concrete example on how to build your proposal budget table. There are different steps to follow. Some steps, most of them are to be done in the annex on budget. And the last one is to basically encode your budget in the ECIT tool. But I will go through them one by one. So let's take this example that you have 10 million EU funding available for the targeted topic. And so you need to match that amount by private member and contributing partners contribution. Okay, so this is the prudent approach, 50%, but of course 45% is sufficient. That's the formal minimum. So the first step is to calculate the contribution from the private member and the contributing partners in your project. You can also have only private members or only contributing partner in your project. You don't need to have both types, of course. But so the idea is to calculate the contribution from those types of entities, and it needs to equal the 50%. So here you can see, for instance, that the first one is a hybrid participant. Out of the 6 million of costs, they request 3 million. So ICOP will be only 3 million, but they also bring a financial contribution paid. So in total, their contribution is 5 million. And so like this, you play a bit with the figures and you manage to get the total contribution that should reach the 10 million. Okay, then you calculate the remaining amount of fund that is available for the other beneficiaries, the beneficiaries that are actually requesting funding only. So those public partners that we expect to request the full reimbursement of their cost. So how to calculate what is remaining as funding? Well, you need to take the total contribution, so meaning the 10 million, and you need to deduct what those industry or what those private members and contributing partners are requesting as EU contribution, and then you get what is the EU funding left available. So in this case, they are requesting 4 million, so it gives 6 million left available for the public partners. Then the next step is to bring those public partners to the project, to the budget. So I've put them here in yellow, in green, sorry. And so the you need to make sure, of course, that their requested funding remains within that limit of the 6 million. Here, for instance, you can see that the SME X is like covering its all eligible costs with two sources of financing. So 1.5 million is coming from IHI and 1 million is coming from a financial contribution. And so in total, you see that they request the 6 million that was left available. And we reached the balance, between private funding and public funding. So the idea is, of course, to do this in the tool, not the tool, the annex on budget. So I made the exercise to fill in the annex based on the example, and this is what it gives. And then I can see directly that actually I reach 46%, which is fine. But okay, as you can see, in the actions needed, or actually it could be rephrased as suggested, you could still increase this threshold up to 50% in order to adopt the prudent approach of IHI by increasing actually your contribution from private member and contributing partners. So if you want to do this, you can you have actually several potential options possible. You can decrease the industry requested EU contribution so that it automatically increases the ICOP. You can also increase the industry's cost to automatically increase the ICOP. You can also increase the IKAA or make a combination of those options. And so this is what it would give. I reduced the requested contribution from one private member. So automatically it increases the ICOP and it increases therefore the total industry contribution, and I reach 51%, as you can see. Then the next step would be to fill in the detailed budget tab, which is the one compulsory actually in the end, and to check again if everything is fine in the check results tab. If not, you need to adapt, of course. And when everything is correct in the annex, you need to encode your budget in the ECIT tool. And as I said earlier, ensure consistency between the value in the annex and in the EC tool. And then you're done. Only easy. Not really, sorry. And one last slide. It's regarding the different types of participants that you have in your budget table, whether it is in the annex on budget or in the ECIT tool. So in the annex on budget, you have 4 types of participants, while in the ECIT tool you have 3. But it's not difficult to make the link actually, but still we have one slide to help you out. So in case you have in annex on budget a beneficiary requesting funding, in the ECIT tool it will be either you will need to select either beneficiary or affiliated entity, depending of course if there is a legal or financial link with the beneficiary already or not. As the associated partner is also just associated partner. It's the same in both places. And then for the private member and contributing partners, we have here a bit of a decision tree to just help you out to finding out, okay, what am I basically? But I'll let you read this through separately after this meeting. And in case you have any questions, feel free to contact us anyway via the applicant email address. Those are the reference documents I was referring to during this presentation, so feel free to have a look at all those documents. And well, as I said, feel free to ask questions if you still have some doubts. Thank you.
Thank you very much, Gael, for this extensive presentation and this crucial content. We will open the floor right away to the questions, because we already have several questions in the chat box, but please use the function to type in your question. You still have time. So we will start right away with the first question from Doris. Is IKAA mandatory? How much IKAA contribution is expected, and what are typical examples of IKAA?
So no, IKAA is definitely not mandatory. You can actually reach a 45% with only one type of contribution, so only with ICOP, for instance. And there is 1 or 2 slides actually with some examples of IKAA. So I would invite you to have a look at those slides. And if it's still unclear, of course, we can provide others examples.
Thank you. Following question is from Chiara. So public partners, for example, universities, are prohibited to co-fund the action with person time of staff personnel or in other ways?
Yes, indeed. Universities, I mean, public partners who are not private members and who are not contributing partners, indeed, they are not, they cannot co-fund the action. So they cannot contribute in terms of ICOP, in terms of IKA, and in terms of financial contribution. It will indeed not be considered as part of the 45%.
Thank you. Next question is from Oleg. What is the difference between for-profit organizations, SMEs and larger companies, and contributing partners according to the IHI terminology with regards to funding?
The difference between SMEs and large companies, there is no, in single stage call, there is no difference. It's open to everyone who is basically established in the EU or in the associated countries, so Horizon Europe, or in one of the countries, low and middle income countries. So whether you are an SME or a large company, there is no difference for call 5 in terms of eligibility for receiving funding. And then a contributing partner, what was the question about contributing partner, sorry?
In terms of terminology, so what is the difference between for-profit organizations and contributing partners?
Okay, so contributing partners, we expect them to, they need to apply to become contributing partners. And so if they apply, obviously it's because they want to contribute. So in terms either of ICOP or in terms of financial contribution to the proposal. So they may also, request for something for funding, even though we don't expect much cases like this. But theoretically, they are eligible for receiving funding just like the others, as long as they are based in the EU or in the associated countries or in one of the low and middle income countries.
Perfect. So
I mean, yeah, I don't know if my legal colleagues are on the call and if they want to complement, but
your legal colleagues have just entered the room, so I'm sorry.
Thank you, Desmond. I don't know if you want to complement my reply.
You actually came in halfway through your answer, Gail. I'm sorry. The part that I heard sounded accurate and extremely comprehensive. I'm not sure how much I can add, but to be honest, we didn't hear the question.
Okay.
I can reread the question for you. So Oleg was asking, what is the difference between for-profit organizations, SMEs, and larger companies, and contributing partners according to the IHI terminology with regards to funding?
Oh, sure. Okay. Well, I mean, I think Gail covered it. I mean, the person who's asking the question is using all the right words from a legal perspective. We love terminology, but basically, a contributing partner is basically defined as someone who's not connected with the private members, not an affiliate of the private members, not in any way connected to them through an association, who nevertheless wants to basically contribute in kind to an actual IHI project, and basically submits an application to the IHI governing board in the form of a letter, the template of which we have available on the website along with the contributing partner guide. And in that letter, the would-be contributing partner basically says, I am company X, or I am foundation X, or I am charitable or philanthropic organization X. This is how we're actually going to contribute to IHI's strategic objectives. This is how we're actually going to contribute to the project. This is the details of the contribution I'm actually going to make. And I'm sure Gail has touched on this, that the contribution will have to basically take the form of actual incurred costs in the actual project, something that's going to appear as a line item on the company balance sheet. So it can't be something theoretical. And then that letter is then reviewed by the governing board, and then they either say yes or no. And if you're accepted, then you do indeed become a contributing partner. So it is envisaged that an SME in this case who wanted to make contributions, for instance, in terms of FTEs towards the project, could submit a request to become a contributing partner. They'd also have to say in their letter, what they're contributing basically is good for the project and also good for IHI strategic objectives. But then once they're accepted, then they are classified as a CP, and then they can participate in the project as a beneficiary or an associated partner, depending upon where they're coming from.
Thank you very much, Desmond. We go to the next question from Angelica. Can associated partners receive financial contribution, in particular if the associated partners is located in the UK?
So associated partners, yes, they can receive financial contribution, but a financial contribution paid to an associated partner would not be considered for the 45%, because to be considered for the 45%, the financial contribution paid, so either by a private member or by a contributing partner, so it should be paid to an entity that is eligible for receiving funding. Okay, so that's just one comment aside, but otherwise, yes, associated partner, they can receive financial contribution, and even if they are located in the UK.
Thank you. Next question is also from Chiara. Why a participant should incur in IKAA if they are not funded?
So IKA, it can help the consortium reaching the 45%. So that's I think a good reason.
Thank you. Following questions is from Blandine. Regarding the IKAA, before project starts, does this happen only if the consortium receive a funding?
So yes, IKA at project level, so it should be inserted in the annex on IKAA, then it should be evaluated by independent external evaluators. So if the project is selected, then the project goes to the grant preparation phase, and indeed the project can start, and the IKA then can be reported in the tool. But indeed, the project needs to be selected and approved by the board, and the grant needs to be signed for this IKA to be valid and to be accepted.
Thank you. Following question is also from Angelica. How do financial contribution paid directly to a beneficiary need to be booked? Will financial contribution be reported and audited?
Okay, so basically there should be an agreement between the entity that is paying the entity and the one that is receiving that financial contribution. So there should be a written agreement, right, on the modalities, so when to pay for what. There should be also a reference to the project. And if it will be audited, yes, the auditor will check if there is an invoice, some supporting document, and if it is recorded in your account.
Thank you. Next question is also from Oleg. Under which conditions can larger companies be founded in single-staged calls?
So, as I said, there is no distinction between larger companies or SMEs in single-stage calls. In single-stage calls, it's quite open. Any entity that is basically based in the EU or based in one of the associated countries or in one of the large low and middle income countries are eligible for receiving funding.
Perfect. Next question also from Irene. You mentioned that the funds will be reimbursed. Does it mean that the public partners, SMEs, academics, need to pay for the activities and then ask for reimbursement, or will the money be provided in advance?
Okay, so once the project is signed, there is pre-financing payment made already before actually the costs are incurred. But so that's a first payment that is made to the coordinator of the project, and then the coordinator needs to distribute those funds across the different participants of the project. And then after each project period, usually the first period is 1 year. So after 1 year, the technical reporting is requested, as well as the financial reporting. It's together, and so based on the assessment of the financial and scientific aspects, the IHI is reimbursement the costs that have been incurred by the different entities and reported in the tool.
Thank you. Next question, also from Chiara. It is not clear why should the consortium share with IHI its plan for IKAA. For example, the management of its own resources not reimbursable. If they are not going to be reimbursed, why should the consortium bother to report on them to IHI European Commission?
Yeah, well, I understand, but again, it's for the matching, principle that I explained at the beginning. Since it helps contributing to the 45% contribution to the project, those contribution, whether they are ICOP or IKAA, needs to be reported and checked.
Perfect.
So
Thank you.
yeah, that's really the reason.
We will move to the next question from Doris. What will happen if the 45% threshold is not met at the end of the project due to changes? Will the academic partners or non-IHI members eligible for funding lose their funding or even have to pay back funding?
Good question. Well, it's actually, there is this declaration to be signed by the coordinator of the project at proposal stage that to actually confirm that 45% will be reached and actually also maintained during the project implementation. So whenever that's why you have also this recommendation to aim for 50% to avoid that kind of situation that you go under the 45. But then it's the responsibility of the consortium to actually find the mitigation measures, to actually maintain that threshold. So it should be maintained in any way. So it should then be compensated by another private member or another contributing partner, so that it can be maintained. Do you want to reply in case it goes? No.
We have another question also from Chiara. Is own resources co-funding? Can there be staff person time and or access to infrastructure for academy?
So the own resources is a way of covering costs, right? So first the cost needs to be eligible, and then they are either reimbursed by IHI or by a financial contribution, or they are actually considered as the own resources of the company because they're actually not reimbursed. So if they can be considered as co-funding, that's only when the entity is actually a private member or a contributing partner, because in that case their own resources are actually ICOP, but for that you need to be a private member or a contributing partner.
Thank you. We have one last question from Irene. Are contributing partners and private members mandatory? And this question is also for our colleague from the legal team. Carolina.
Yes, hi, Carolina Gutmastova from the legal team. Well, this is a very interesting question actually, but we need to go back to the 45% eligibility criterion to kind of answer this question. So in fact, it's not mandatory for the project to have any contributing partners or private members, but it is mandatory to achieve 45%. And the 45% is gathered from in-kind contributions, either from private members or contributing partners. Also, obviously, it's up to the consortium to achieve this 45% and to gather the membership in the consortium in order to do that, but it is not obviously not mandatory that every project will have a contributing partner. Gal, you want to add something?
Yeah, no, but whether it is the 45% are reached either with private members or with contributing partners or by both.
Yeah.
Yes, there is no obligation to have both type, just one of the two is fine as long as the 45% is reached.
Yes.
Perfect. Thank you very much. We don't have further questions for now in the chat box. So while maybe you take your time to type in other questions, if you have some, I will take advantage of showing you how to make the most of the platform that we are using if you want to find a partnership to create consortia. So just navigate in this platform, go to the marketplace on the main menu tab, select project cooperation and select the topics, the topics that you're interested in, and you can browse through the project ideas and contact the owners of these projects. So I think that we don't have further questions. So let me thank thank Gael for this presentation and all the colleagues that intervened. And thank you all for the participation to this webinar. Let me also remind you that, that if you missed the first part of this presentation, the recording and the presentation slides will be available on the IHI website as well as on this platform. And if you have further questions regarding the call 5, you can, in the financial part, you can address your questions to the emails on this slide, applicants@ihi.europa.eu, finance@ihi.europa.eu. And with that, I wish you a pleasant day. Goodbye.